The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the August 1st terrific Thursday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, well, that is something we must master each and every day. So let's begin with some empowering beliefs. The first one brought to us by Vincent van Gogh. This one is a beauty. Listen to this one, folks. He says, if you hear a voice within you say, you cannot paint, then by all means paint, and that voice will be silenced. Just think about how you could use that in your life, or maybe something that you could pass on to somebody else out there. Zig Ziglar, he said, people often say that motivation doesn't last. Well, neither does bathing. That's why we recommend it daily out there. I agree. Daily, we should become motivated. How about this one from George Adair? He says, everything you've ever wanted is on the other side of fear. That is a beautiful way to live. Folks, success leaves clues out there. That's why I want you to understand patterns and candlestick charting out here. It's why I want you to be able to understand how to read the message of the markets. So let's go do that right now. We've got the Dow traveling out at 15,646. That's up 147 points out there. The S&P at 1704. That's up 19 points. The composite up 39 at 3665. Russell 2000 up 13 points at 1058. Google's up $11. Apple's up 240. Microsoft up 11. Tick Cisco up 27 cents out here. Leading the charge, and I do mean charge by charge card to the upside, is MasterCard. MasterCard had a nice day yesterday. Well, today they're on fire, up another $34, up 6% out here. Pioneer Natural Resources up 14%. That's up $22 and change. Priceline up $14.50. That's a rocket ship for sure. Concorde Technologies, CNQR up $11. That's up 1%. Concorde's up 12%. I apologize. They're up $11 out there. Google's up 11. Yelp up 8.79. That's up 21%. C-Trip Communications, they're up 23% this morning. Zillow up 10%. Trulia up 18%. New Skin Enterprises up 6%. That's all to the upside. To the downside, Hanger Inc. being hung this morning, down 14%. That's off $5 and change. HGR is their ticker symbol. IOC off $5. That's down 6%. Open Text Corp, OTEX off 6%. BJ's Restaurant down 10% this morning off $3.50. Royal Dutch Shell off about 5% off $3.30. Selly Beauty Holdings, not as beautiful this morning, off 9% off $2.77. Proto Labs off 4%. Rovi Corp, ROVI, off 11%. Hydrogenics, HYGS, that's off 17% here this morning. You've got Gentherm, THRM is their ticker symbol. They're down 12% here. We've got World Fuel Services off 5%. TRW Automotive off a couple of percent. Our call-in number, 877-927-6648. Today is a planetary index date, a 15p index date. And during the breakout there, I was able to, I developed a system, created a system. I've got the entire ephemeris digitized so I can grab whatever information as I need. And then I have a way to actually import it into my charts to take a look and see if they have had any significant impacts on the market. So, of course, it's a P-index date. That stands for Pesavento index date out there. So let's go take a look at the last several out here. I've got the Dow chart actually going back to 1928 out here, so we can spend quite a bit of time. So today, August 1st, is a planetary index date. It's where you would normally see a change in trend or should see a change in trend. Now, all that I have posted on this chart here are all of the other 15 planetary index date. And this goes back to the original work of Larry Pesavento and Dr. Ruth Miller. So the last one that came in here, looks like the last one prior to today's, was on November the 2nd 2009 out there. And on November 2nd, 2009, it actually, let's see, where's November 2nd out here? Just got to move it over here. November 2nd, 2009, you had the market make a low. How about that? So let me just explode this up on the chart out here, and then you can make a determination whether or not these things work, but the market moving up or down. But here's November 2nd. November 2nd gets down. You can see the market was trending lower at that time, coming in off of the October 21st level, which was at 10,119, made a low on November 2nd, got down to 96.78.95. That put in a fairly significant low. In fact, that low was tested back in July of 2010. The market took off from there as well. So there is the most prior occurrence. In fact, let me pull up my chart and make sure, because sometimes these things can get lost to the upside or to the downside out here. So with the market moving up, says that maybe today the markets are doing what they're supposed to do, and it's moving up into a P index day. So November 2nd was the last one that we saw with a 15. Let's go back now. Prior August 6, 2008. Let's go find that one on my chart. Here we go. August 6, 2008. We can see here the market was moving up into August 6th of 2008, and you can see that, in essence, within a couple of trading sessions had marked a high out here. So now we're kind of 2 for 2 on these 15P index dates out here. The one prior to that, November 30th, 2006. So let's go into the 2006 corridor. Let's see what we can find. What did I say? It was January 30th. There we go, January 30th, 2006. Let's go find that date out here. January 30th, 2006, you had the market moving up into it. And, in fact, on January 30th, 2006, moved up just a tad higher, only a slight retracement out here that took place from February 1st. There was a little bit of a higher high, and then it moved back for about 4 or 5 days out there. So it did mark what I would call a short-term reversal in trend out there, not as significant as the last two. Let's go back a little further in time. We'd have to go back to 2002. So let's go take a look at the 2002 time frame. That 15P index date coming in on March the 15th. So let's go find March the 15th. Oh, my goodness, look at that. That seemed to have marked a pretty decent high out here in the marketplace. March 15th, the Dow had closed at a price level of 10,607.23, and boy, take a look at that. Then the Dow decided to go ahead and move down from the 10,600 level, where it made a low back in October of 2002, down around 71.97 out there. So there's I would say paying attention to these 15 planetary index dates makes some sense. Let's go take a look at the one just before that. That would be October 14th of 2011. Let's see what the market was doing back then on October 14th. It was making a high. In fact, this came in October 14th was a weekend. October 12th, there was a high out here of 94.09, and that seemed to mark a short-term high out here. The market did go ahead and pull back into the 92.09 level, so there was at least a short-term change in trend. Let's keep doing this out here. Why not? Because we don't do this too often. And so that was 2001. Now we've got to go back to 1998 to take a look at the next ones that come in. The one prior is going to be on February 26 out here. Let's see, February 26, 1998. Doesn't look to me like this one you could read a whole lot out of. You had the market really just kind of consolidating sideways out here. So we're going to say February 26, 1998 for whatever reason. That one did not work out here. But let's take a look at October 16th of 1997. October 16th, 1997, you had the market, which had been moving up into that date, and then the market decided to sell off pretty swiftly, because it went from October 16th's high was 81.46 all the way down to a low that it made at 69.33 on October 28th out there. Let's keep doing this. This is a little bit of it's fun for me. I don't know if it's fun for you. So that was in 1997. Now we've got to go back to 1992 to take a look at the next P index date out here. So give me a moment to do that as we go back in time. There we go. Let's pull this down here. So in May 28th of 1992, let's take a look at what was put in here. May 28th put in a top out here right around the 3,400 mark. And then the market decided to go ahead and make a low, made a nice hammer candle on October 5th, 1992, down at the price level of 30.87. That was after making a high out there of 34.34. So let's keep going back here. So what we are seeing here, folks, as we take a look at these 15P index dates, 15P index dates seem to have some significance in the marketplace out here. And this is as opposed to looking at all of them. We're just looking at the ones that had 15 planetary combinations of conjunctions, squares, trines, you name it, semi-squares, the whole kit and caboodle out here. So let's go back before 1992. Let's go back to June 9th of 1991. Looks like we had quite a few coming in here. So let's pull this down to the June 9th time frame. June 9th will take us into the level here. So it was really, June 9th itself. The actual high came in on June 3rd, not on June 9th. On June 9th, looks like, which was also a weekend, so we could say June 7th. So it's not too bad, very close to that high that came in, and went ahead and ended up making it was a short-term reversal in trend for sure. We've got one that came in May 26th of 1991. May 26th, the market had been bottoming out, but the bottom really came in back on May 15th out there, so that was off a bit. Let's take a look at, there's a bunch of 15P index dates out here. How about December 28th, 1990? That most certainly put in a high out here. The high actually came in on December the 21st out here. However, then it moved sideways, and December 28th, it was still moving sideways, and then the market decided to go ahead and move down into January 11th, 1991. And here is the only open gap, I believe. Is this the only open gap still out here? When was that the war out there? Must have been, was it 1990? Was it 1991? Folks, because there is, I believe that is the only open gap still left inside the Dow, which was Operation Desert Storm, I believe. Was that, folks? Maybe somebody in the den can tell me if that was it. That was on January 17th, 1991 out there. But here's another 15P index date that most certainly worked. Let's take a look at the one prior, and then we'll go take a look at the rest of the markets and take a look at what they're doing. But I think it is important to pay attention to this. That's why I went ahead and posted it on the screen, because we had the market moving up. If you take a look at April 13th, 1990, that also you had the market moving up for 2 days. It went ahead and consolidated sideways. Those highs were never taken out again. The high on August 13th, 1990 was 27.52, and then the market decided to go ahead and make a low going into October 11th, 1990, down around the 23.44 mark. So that was a heck of a correction out there. So that's going back into from 1990. How many did we take a look at here? So August 3rd. Let me go count these up here. I should say August 13th. So 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And today marks 13, lucky number 13. So hopefully you were keeping track out there. My records indicate that 15P index dates work pretty darn good at identifying either long-term or short-term reversals in change, in trend in the market. Something to think about. We'll be right back, folks.
With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. During the break there, I was having a little bit of fun. I was going back into the 1900s. My chart goes back to 1928 inside the Dow, and after the crash in 1929, there was the low was made back on November 13th, 1929. Out there wasn't the low, was the low during that leg down. There was another bounce up. Looks like probably about a 0.382 retracement. Let's go take a look at it. Coming off of the September 30th high, all the way down to the low that came in on November the 13th out there. Now, just to show you how these Fibonacci numbers actually work. So we're coming from the high of 386.10 to a low of 195.35, and the actual 0.382 retracement would take you to, let me widen this up here so you can take a look at it on Tiger TV, 268 and a little bit of change, and what it got up to was 267.56 out there on December the 9th. Then it went ahead and it retraced back. Let's take a look at what that retracement was coming off of the low here from November 13th. The retracement there, just a little bit above the 0.618 area, but there was a 15 planetary index date back on December 19th, 1929, and that is when we saw a low put in the marketplace. The market went ahead and bounced up all the way into a high back on April 16th of 1930. Now, here's an interesting one as well. So you can see how these things are they, at least you should be paying attention. Is this coincidence? I don't think so. Now, take a look at it. It says we should at least be paying attention to it. So if we take a look at February 24th, 1931, you had the Dow moving up into it. That actually made its high on February 24th, 1931. That was at a price of 197 out there. And then, boy, from that point forward, you went from the price of 197. Let's see when the low actually came in here, all the way back down into 1932 when it got down to a low of 40.92 out there. So I just suggest that we at least pay attention to that and tune into Larry's show. It is terrific Thursday out there. Maybe Larry will have some additional input on the planetary index dates out there. But those are your P15s. And let's go take a look at the rest of the market now. Let's go see what is going on here as we speak. Right now, the Dow's up 149, S&P is up 19, and the S&P, the ES-mini here, is in fact breaking out of that 23-point consolidated trading range that it's been in since July 17th. So it's traveling at 1,700 right now. The actual top of that range was at 1,695. We'll find out if this is a one-hit wonder or if this is going to be a 23-point home run. A 23-point home run will take you up into about the 1722, 1723-ish range. Right now it's at 1700.25. Now this is a 120-minute chart that we're looking at, so there's still an hour left in this trading session before this candle actually forms. So you can't really go with this candle as of right now. You've got to wait until the middle of Basil's show. And by the middle of Basil's show, somehow the ES-mini sells off and gets back into the 1695 range. That will be a colossal failure for sure. Let's go over, take a look at a shorter-term chart now. Let's take a look at the 30-minute chart. 30-minute chart, clearly that is breaking. But now I think this had about an 11-point trading range that it was traveling in. So if we take 11 points on top of the 1695, that would say you should at least get to 1706. You're at 1700 right now. We can also see, though, danger signs out here because it is in the extreme overbought condition out here. It doesn't last long. Those overbought conditions, just as oversold conditions, have to be worked off. And they are worked off, in this case here, either by pulling back or moving sideways in the marketplace out here. So that is the 30-minute chart, and that has reached the extreme overbought territory. Last time that we saw the ES-mini do that, it was coming into the 11 o'clock time frame. We're at 10:28 right now. It was coming into the 11 o'clock time frame on July 28th out there, and then it moved from 1688.50, and it worked off that overbought condition most certainly by pulling back to a price level of 1675 on July 18th out there. So it's dangerous to go ahead and buy up here and try to chase this one. Instead, what you want to do is, if this is a real breakout, what it should do is come back, work off the oversold condition, let it do that. Maybe by working off the oversold condition, what it does do is it gets back and it tags that 1695 area, and then it takes off. But, boy, I say we got to pay attention to those 15 P index days. Well, you don't have to, but I certainly am going to go ahead and pay attention to them. Let's go take a look at the indexes out here and the ETFs. We'll see if we got any kind of volume in the move here. The VIX right now traveling out at 1287. So that has pulled back here until the VIX gets above that rising trend line out there. Maybe there's no real damage to the downside being done. The composite here, the composite was the only real bearish reversal candle in the marketplace yesterday. It had a shooting star candle, that high clearly being taken out. That was 36.49. The composite had completed a 1 to 1.2728 to B equals CD yesterday. I mean, to the T, coming off of the March 09 levels. Maybe the composite wants to run to 40.72. This could be Uncle Ben's market. We'll be right back, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at Nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Be impressed with the behavior of the metals with gold and silver. Gold specifically. Right now, gold is back $1.20. Trade out at $13.11. That is with the U.S. dollar index. Now, look, I've got a 10-minute delay here on my U.S. dollar index chart. It's up 76 ticks right now. Trade out at 82.30. Now, I've got the gold contract on my chart. That's what we're taking a look at here on Tiger TV. Now, the black line that is on the chart is the U.S. dollar index. So we can go ahead and take a look at the correlation between the U.S. dollar index and the metals marketplace out here. Now, what I've done is I've inverted the U.S. dollar index so that it is the better correlation with regard to the commodity. So that means if the line is moving down, what you are seeing is you're seeing the U.S. dollar index actually get stronger. So you would expect the price pattern behavior of the metal to also be moving lower. But take a look at this. This is coming off of the low out here from June 28th, 1179.40, all the way up to the high that was put in on July 23rd, 1348.70, the same on July 24th, so it doesn't matter which day you use. Gold has not even pulled back to the .382 retracement, 1284 or 1244, some area where, as technicians, we would be looking to either take or add to a position in gold out here. So I got to tell you, if you were one of those non-reportables, and the data will be released tomorrow at 3:30, the CFTC data. What I can tell you, and I'll go ahead and put the weekly chart on my screen here, is that we have not seen the short covering rally inside gold. It's going to be spectacular. It's going to be some incredible fireworks when that does. If you were on the short side of gold, you would have to be saying to yourself, well, what is it that could possibly take place that would go ahead and actually move gold to the short side? I mean, you got the U.S. dollar index up 80 ticks right now, and gold can't really pull back out here. Now, why do I say that we have not seen a short covering rally? That's because of the two bottom quadrants of my charts here. This is the CFTC COT data out here, and I can tell you as of last Tuesday out there, the non-reportable group, the group that stays at the party way too long, is at the highest net short position historically. Like historically, folks. So they haven't let off of their shorts out here. And, boy, if I were one of those non-reportables, taking a look at today's action, I would be closing out my short positions big time. Because and we'll see what happens. You know, I can report on it on Monday's show. I always take a look at the data over the weekend, you know, looking for information. It can't be used as a timing tool. But I can tell you from a timing standpoint, with the U.S. dollar index being up the way that it is and gold behaving the way that it is, I don't think we're going to see that pullback that we're looking for. Today would have been the day. Today was the optimum day for gold to go ahead and pull back. And it's not. All that gold is really doing is just continues to test the top of this descending price channel that it has been in ever since the September 2012 time period. It finally has broken through there. When you break a trend line, a channel line, what have you, in this case here was a downtrending channel, you know, you come back and you test it. But this is about as impressive as anything that I have seen in the marketplace out here, and that is the way that gold is behaving. So that says a lot for gold, the GDX, the miners, the whole bit, the whole kit and caboodle out there. At least that's my read on it as we speak here right now. If we take a look at light sweet crude, that's a whole different scenario. You've got this moving up, and you've got the U.S. dollar index moving up. This is price. We can go ahead and overlay the same chart on my screen, but you know we're going to see that correlation most certainly isn't there today. Got a reversal signal yesterday, getting follow through today. And this says that it may want this is going to make its run to 114 at some point in time after breaking through this sideways 14-point consolidation range. So that is where light sweet crude is headed. And it doesn't matter what the U.S. dollar index appears to be doing out there. Light sweet crude on its way north. Let's take a look at bonds. See what bonds are doing here this morning. Bonds traveling out, trying to get down and test the swing point low from July 8th. 132.02 out there, 427,000 contracts at the low. So far today, light volume, 191,000 contracts. So a nice test of that would be could be a small now a small reversal. But when I say reversal, it's really just traveling in a trading range. You can't break through this July 5th candle out here. When it gets a close above the 136 mark, then it will have me be a believer that there's going to be a nice bounce inside bonds. That bounce taking you 138.25, maybe 142 out there, the 0.618 retracement. But so far, we're not seeing that on our radar screen. If we take a look at natural gas here right now, natural gas breaking through. So, and we were taking a look at natural gas as it was forming this 0.786 Gartley buy pattern. It did that. It did that on July 29th. So that was Monday, yeah. So it was doing that on Monday. And when you go ahead and you make the D point, because a Gartley pattern, it's nothing more than an A to B equals CD pattern of some other move. In this case here, it was the up move. It was off of the lows coming back into the February 2013 time frame. When you go ahead and you make that D point and you gap down into it, I don't know if there's a more cautious sign out there in the marketplace, and that's what we're really seeing here this morning, because that 0.786 level is, in fact, failing. That just sets up the move of a move inside natural gas. At least it does right now until the bulls run in. That'll take natural gas down to about the 313 to 317 level out there. That's what it looks like as we speak at the moment. Let's go check in on a couple of the sectors inside the S&P. Now the technology sector, the XLK, the numero uno weighting inside the S&P. You would think that this thing would be off to the races. Let me hit my machine here, because there's got to be something wrong here. Got to be something wrong, folks. The Dow's up 138 points. S&P is up 18, 1 full percentage point at 1703, and the XLK is hardly even budging it's not off to the races. It's not taking out its highs. It's certainly not taking out its highs back here from May 22nd, which is at 32.29. It's traveling at 31.98 out here. It's right into the resistance zone of July 18th. If the XLK closes back below 31.92, you'll have 3 tests of a resistance zone, meaning that gap down from July 18th to July 19th out here. But the number one weighting structure inside the S&P 500, you talk about lack of participation. Yeah, sure, it gapped up from yesterday's close, but you would expect this thing to have no problem taking out the highs of yesterday at least, right? The high yesterday, 32.02. It's only been to 32.01, 1.2 million shares. Volume not too bad. But this is not exactly what I would consider a big breakout here inside the XLK, and that's number one weighting inside the S&P 500. Let's take a look at the financials. Let's go see what the financials are doing here. Financials up today with volume of 9 million shares, not too bad. Going into 30 million shares, it has a 1.272 butterfly until it takes out the highs from July 23rd to 2093. The butterfly sell pattern is still in effect. That is in the financial sector of the S&P 500. The XLE, the energy sector here, being hurt a little bit, though not a little bit, being hurt quite a bit by ExxonMobil. This has got as many sell patterns as you can find. It's got the A to B equals CD, the longer-term one coming off of the October 2011 lows. That pattern completed. It's got 1, 2, butterfly sell patterns, 1.618 butterfly sell patterns. It failed at the swing point miserably on July 23rd out there. That swing point, only 6 million shares, so it's going up there with some pretty decent volume here today. But what it's really going into is 19 million shares. So we've been trading for an hour, 3 million shares. It's, if the volume were to keep up this pace, you would say that'd be pretty impressive as it goes into and trades into the swing point high of May 22nd. We'll just have to pay attention to the 83.95 level and see what the XLE. Now, the XLE is like number 5 or 6, I think, already of the 9 sectors with inside the S&P 500. So won't have as much of an impact there. But the XLP, the consumer discretionary, that's a whole different ball of wax out here. Let's take a look at what this is doing. It's trying to take on the swing point of July 22nd. That's got 8 million shares up today with 2.2 million shares. Of course, that's going into a downdraft with huge volume. 21 million shares. That wasn't even the biggest downdraft day, but it's going into, it's really taking on that 21 million share breakdown day. And so far today, only 2.2 million shares. So it doesn't have the energy. All these things have got to make you say, something to think about. In fact, let's go take a look at some of the individual stocks here. Let's take a look at a core group of stocks and see what their price behavior is out here. How about this one? Simon Property Group. Now, this is a weekly chart, so this chart here is not going to make a hill of beans until tomorrow, the end of tomorrow. But we can take a look at on Simon Property Group, and this is coming off of its 2009 lows. It's trying to crack through this trend line. Now, it cracked through the trend line once so far, which was on June 28th, as a significant low was being made in the marketplace. Right? You're hearing me, right? June 24th was the low. The week of June 28th, a significant low in the marketplace, and that's when Simon Property Group was trying to hit that area. Now, what are the markets doing here? They're at all-time highs, and Simon Property Group is what? Trying to crack through that trend line out there. That doesn't spell real good. That's not real promising for Simon Property Group and its chart pattern. Now, this area here may hold. That would be positive. But when the markets are moving north, you got Simon Property Group headed south out there. And Simon Property Group is also inside the XLF out there. Let's take a look at IBM. Let's go see what IBM is doing. It's doing squat. It's not doing squat. It's doing diddly squat out here. This thing here, it's moved up off of the low yesterday, volume-wise, 788,000 shares. But shouldn't this be partying? Shouldn't this be taking out the July 18th level, 8.3 million shares out there? Today here, it's up with 788,000 shares. It's not doing anything out here. That's the numero uno. This is the number one weighting inside the Dow out here. So with the Dow trading out at 15,633 up 134 points, wouldn't you think that the number one weighted stock would be off to the races out here? Well, it most certainly is not. So that's got to make you say, something to think about. If we go take a look at ExxonMobil is putting the weakness in on the Dow out here. You've also got Intel, which is trading off just a bit, putting in the strength inside the Dow. Bank of America, American Express, HP, and JP Morgan out here. Let's go take a look at some of these other equities. Let's take a look at Apple. What is Apple doing? We know Apple wants to complete its 1-to-1 A to B equals CD, but on a day like today, shouldn't Apple be taken off to the races? I mean, it's already got a confirmed A to B equals CD across the B point with wide price spread accelerated volume. It did that on July 24th. Yet it hasn't made its way to 465 out there. In fact, it's still trading inside yesterday's candle. This is not doing anything out here. Something else. Well, let's go take a look at Google. Let's go see what Google is doing. Folks, Google here, out with earnings. The earnings may be the actual high. We'll take a look at the earnings. Were on July 19th when it actually moved down. Now, in the case of Google, what's very important in watching this stock, I'm just moving this up a little bit out of the way so we can take a look at it, is typically in the case of Google, their earnings release, price will typically continue to travel in the direction of that earnings release. It's one of the more reliable stock patterns out here for whatever reason. And at this stage here, Google up this morning. Sure, it's up at 901.04 volume wise, 883,000 shares, but it's really going into a gap down of 7.4 million shares, not even above the top of that, which is 902.95 out there. So it's not exactly. Yeah, it's got nice price participation, but no real volume behind the move there. We know ExxonMobil, or if you don't know ExxonMobil, they were out with earnings before the bell. ExxonMobil had been in a 7-point sideways consolidation, and if we take a look here at that sideways consolidation, it was supposed to come back and test it, but the sideways consolidation here, which is a year consolidation, 7 points it broke out of, it was 15 million shares on October 19th, and when it broke out of this level, did it with 10 million shares, which was okay because, well, actually wasn't okay because it had 19 million shares on May 20th. Was it 19? Yeah, 19 million shares on May 22nd. So it broke out with lighter volume, came back, and as it was coming back, volume was accelerating as it was testing that area. And today, down with big volume, 7.8 million shares in only an hour and 15 minutes of trading. So what does this set up for ExxonMobil? Well, it's doing the first test that it should do, and let's draw the lines across here because ExxonMobil did gap up. There was a sign of strength out here. Let's put support 1 and support 2 out here inside ExxonMobil. Looks like it's tested support 1, not support 2, but the breakout was with 12 million shares. So it's coming into a sign of strength and a breakout with 8 million shares already in an hour of trading. That's not going to hold it for sure. So what does that set up? That sets up ExxonMobil getting back to June 24th. That low is 88.02. And if it's coming into that area with volume, that's 17 million shares, it'll get all the way down to the bottom of the trading range, which would be a nice buy. That, well, could be a nice buy is what I should say. At 85.02, if it can come down there, test that area, hold with less than 17 million shares, that would be a nice buy because you've got a nice $7 trading range inside ExxonMobil. Let's see what else we've got here in the core group of stocks. Let's take a look at Microsoft. Well, Microsoft really had taken a beating. No wonder that it's not doing anything today. This thing was down with major volume, which was 248 million shares. So on a day when you've got the markets moving northward, I'm saying, you know what, folks, pay attention to that 15 Pesavento index date out there. There were enough examples going back on the charts that we laid out there that have got to make you have a little bit of pause out here in the marketplace. Let's go take a look at what else do we have? Intel. Let's take a look at Intel. Intel should be bouncing nicely today, and of course we know that that's eating into the S&P or into the S&P 500, into the Dow here today. So it's trading at its session lows with the market up towards its highs. That must make you say, something to think about. So what's Intel going to do? Looks like Intel's going to come back and test the bottom of that hammer candle July 10th, 2264. It breaks that hammer candle, and if you're long on Intel, you're wrong on Intel. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Right now, the Dow's up 122, S&P is up 16, Composites up 37. Had a couple requests to take a look at a few things, so we'll do that quickly here. Then we'll wrap up. I'll give you the elements that I think you need to be paying attention to during the trading session today. First, we're taking a look at the Russell 2000 futures contract, the daily contract. Now, the reason why I like this is because it's got 3 beautiful reversal patterns out here. Very strong, very powerful reversal patterns. Number one, you've got the A to B equals CD up. That's coming off of your October 7th low. That's your A point, your B point, March 30th, 2012. Your C point out here at June 8th. That's a 1.272 A to B equals CD up at the 1050. You've got a 1.618 butterfly expansion. That's off of the May 6th high all the way down to the low on October 7th, 2011. And we've got the perfect, and I do mean perfect. This is textbook 3 drive to a top pattern that completed last week. Out at the 1057 mark out here. So in order for and this is the strong index inside the clan out here. So in order for there to be a real breakout in the market, I would expect we would see this week. This is a weekly chart, by the way, that we're looking at. So it's even longer term out here. Did I say daily? My apologies. It's a weekly chart that we're looking at out here. You're going to need to see a high close well above 1057. Now call it 1067, 1050, 1065, 1067, something like that. That would be a real breakout here. But you got three very significant reversal patterns. No candle yet, but you've got that. So the other request was to take a look here at the IYR. That's the real estate, the iShares U.S. real estate. I got to hit on the right button out here. That is the ETF for the real estate. Where did it go? Son of a gun. Okay, well, I'm going to have to skip right over that because somehow it has escaped me here. Let's go take a look at what it is that you should be looking for today. Number one, I'm going to go back to the 30-minute chart on the ES Mini. On the ES Mini here right now, we know that we got into what? Into overbought territory. It's starting to work its way off. Coming into 11 o'clock, right now you got a little dark cloud cover candle out there. A close below 1696.25 at 11 o'clock will be a bearish engulfing candle out there. Of course, we know that this overbought condition has to be worked off. That's on the 30-minute chart, so it's doing what it should be doing by pulling back to working sideways. If we go take a look here at the 120-minute chart, this is the one I really want you to pay attention to. That would be this chart on this page right here. What we are looking at is if at 11, by 11:30, so halfway in between Basil's show, for whatever reason, the ES Mini gets down into the 1695.50 level, 1695.70 level, you will have had a colossal failure inside the ES Mini to go ahead and break out of that 23-point trading range. If, in fact, during the day, all that the ES Mini does is come back and tags the 1695, 50-ish range and then moves higher, that'll be signaling a breakout. Now, on the New York Stock Exchange, the bears had control at least through yesterday. That means they still have it today until the trading session is up. What you're paying attention to is net advancing issues. Right now, that's at 1272. That would say the bulls have charge of the ball, but you got to wait till the close coming into 4 o'clock. Anything less than 955, 956 out there, it says the bears still have control of the ball. So that's what you should be paying attention to. On the currency side out here, what we know is the real fuel to the fire, which is the euro-Japanese yen. That is completing the 0.618 Gartley sell pattern. And it made it with some nice wide price spread, making that number right around 131.42. I did that during the, this is a 30-minute chart that we're looking at here, during the 10:30 session out there. I mean, completed it to the T. 131.429 was the exact number that it hit. 131.428. is the exact 0.618 retracement. You got to like that. So a 1.618 expansion, all that's needed now to suggest a reversal, and this has on the 30-minute chart moved into overbought territory, is a bearish engulfing candle. That's not going to happen during this trading session, but it may during the first half hour of Basil's show. Stay tuned, folks. Basil Chapman is up next, then Larry Pesavento, Daryl Martin. It is Thursday. That means we've got We've got David White, Andy Heck, and Tom O'Brien. Have a great Thursday. Look forward to seeing you in the morning. Take care, folks.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.